Iran shut off the most important oil corridor this week and said they'll only reopen if you pay in Chinese yuan.
You mean dollars, right?
No, I mean Chinese yuan.
But that means that the dollar is...
Exactly, my friend. And guess what else? Bitcoin moved up while this all happened. Also big this week, the current Treasury Secretary, Scott Bessent, said Bitcoin legislation is unavoidable. And somewhere in there, Stanley Druckenmiller and his $6 billion track record said Bitcoin was, quote, sad it ever happened.
I'm very sad that it ever happened.
Sad it ever happened. But all of this is happening in the same week. I'm Oceans. This is Beyond Bitcoin. You're going to want to stick around for this one. So the Bitcoin price is currently... Well, you have a computer, you can check. The fear and greed index is sitting in extreme fear right now, which is totally normal. Because if you've been watching this channel long enough, you know what that usually means. Here's what's actually happening this week. And I want you to hear all three of these before I tell you how they connect. First, Iran demanded Chinese yuan at the Strait of Hormuz, the checkpoint for roughly a fifth of all global oil flow. And Bitcoin outperformed gold that entire time. We have the data. We scraped it from the depths of wherever Gemini grabs its ones and zeros. Also, 14 major banks published research this week saying the financial plumbing is breaking. Brent crude crossed $100 for the first time since Russia invaded Ukraine. Brent crude, by the way, is a mercenary for hire that remains in dark circles of the underground resistance. Second, the macro conditions that Bitcoin was built for are now fully in place. And as I mentioned in my previous episode, the Fed is frozen. Rates haven't moved. Jerome Powell has 6 weeks left in his job. Let him go. Let him go. Also, Wall Street is now using Bitcoin ETFs as collateral for equity trades. The environment has changed. And third, the administration went on record within 48 hours of each other. The U.S. Treasury Secretary and the president's son both made direct, quotable public statements about Bitcoin. Not crypto, Bitcoin. And we're going to play the tape. Because that's how we operate here at Simply Bitcoin. We play tapes. We're old school. These three stories are really just one story. And by the end of this episode, you'll know exactly what that story is. Before we get into the war and the oil corridors and the yuan, I want to start with something a very smart and very rich man said this week.
That makes me smart.
No, not him. Him. Stanley Druckenmiller. $6 billion under management. One of the most respected macro investors alive. He told Morgan Stanley this week that Bitcoin, quote, is a solution looking for a problem. Wait, is that like a compliment? Like Bitcoin seeks out bullies to beat up or something? Druckenmiller also said, quote, he's sad it ever happened as a store of value, that it wasn't needed. Oh, no, I guess that wasn't a compliment. But he said it this week of all weeks. Here it is.
But to a point, I think they're fine. And
Crypto?
I said this a long time ago, and I'm going to say it again. It's a solution looking for a problem. I'm very sad that it ever happened as a store of value because it wasn't needed. But it's a brand, and these people love it, so it's going to be a store of value.
Wasn't needed. Here's what Zero Hedge published the same week. Bitcoin used to be the first risk asset to get nuked on geopolitical conflict. Not anymore. In fact, it is outperforming gold since the start of the war. Regime shift? Question mark. A regime shift. Zero Hedge's words, not mine. My language isn't that refined, by the way. Zero Hedge said this. The same outlet that spent years treating Bitcoin like a punchline. Yeah. And then TFTC runs this historical record. Bitcoin has a history of outperforming S&P 500 and gold during major geopolitical events. This isn't a one-off. It's happened before during our favorite virus of the past century and during our favorite war of the last decade. Bitcoin dips first, then it separates, like the brand new cheesy sauce from Taco Bell. Good. Stanley Druckenmiller said Bitcoin wasn't needed. The same week, Bitcoin outperformed gold during a bombing raid. That's either irony or a buy signal. It's probably both. But here's why that matters beyond just the price. And here's what 14 of the world's largest banks published simultaneously this week. 14 major banks published 1,598 research reports this week. Every single one is saying the same thing. The Iran war is breaking the financial plumbing. Brent crude crossed $100 for the first time since Russia invaded Ukraine. Largest single day jump since COVID. 14 banks, 1,598 reports, all the same conclusion. You could read them all, but honestly, you could just look at the chart. Here's the context, the part most coverage skips. The petrodollar system started in 1974. The deal, oil-producing nations led by Saudi Arabia agreed to sell oil exclusively to the US. Here's the context, and this is the part that most coverage skips. The petrodollar system started in 1974. The deal was oil-producing nations led by Saudi Arabia agreed to sell oil exclusively in US dollars. In return, the US provides security guarantees and buys their debt. Pretty good trade, I think. Every country that needs oil has to first acquire dollars to buy it. Oh wow, that's a very good trade. That creates constant structural demand for the dollar. And for 50 years, that arrangement has been the foundation of American financial dominance. Not military power alone, not GDP, the dollar. But now, look what Iran just said. Iran just told the world it will reopen the Strait of Hormuz to oil tankers, but only if the cargo is paid in Chinese yuan, not dollars. Wait, does that have anything to do with the war that's happening right now? No, no, of course not. This is the clearest signal yet that the petrodollar system is fracturing and that Bitcoin's value proposition as neutral, non-sovereign money is proven. The Strait of Hormuz, a fifth of global oil, the most strategically critical waterway on Earth. And Iran is saying, you want to get through? Let me get some yuan, son. Nah, not dollars. Yuan, son. Here's why this matters for Bitcoin and why Druckenmiller's not needed comment is so perfectly timed. The argument against Bitcoin as money has always been the dollar is fine. The dollar is stable. Nobody needs an alternative. Well, that argument had a 50-year run, and Iran just publicly ended it at the most visible choke point in global energy. If the dollar stops being the medium of oil trades, the structural demand for dollars goes with it. That's not a fringe theory anymore. That's 14 banks writing it down in Wait, hold on a second. Why are 14 banks writing 1,598 reports? That's like 1,100 reports per bank. Who's writing all these reports? And more importantly, who's reading them? This is what keeps me up at night. And the thing is, Bitcoin doesn't need geopolitical clearance. It doesn't need a reserve currency deal. It doesn't have a central bank that can be pressured into accepting yuan. You can send it anywhere, denominated in nothing but itself, settled in minutes or seconds, depending on how you send it. It's neutral, it's non-sovereign, and there's no permissions required. So Stanley Druckenmiller's call that it's not needed, well, I'd call it the only thing that is needed when everything falls apart. Before we continue, I want to tell you about sat123.com. Look, if the past few minutes have taught us anything, it's that you can't outsource your security to institutions that are one geopolitical event away from breaking down. Sat123.com offers premium survival gear and equipment. They offer solar power generators, satellite phones, emergency preparedness supplies of all kinds. The kind of gear that works when the grid doesn't. And if you go to sat123.com right now and you put the promo code simply at checkout, you'll get 15% off your entire purchase. Stay sovereign, stay connected with sat123.com. I want to talk a little bit about the environment Bitcoin is operating in right now, because it's exactly what it was designed for. The Federal Reserve is holding rates at 3.5 to 3.25%. They haven't moved. They can't move. If they cut too early, inflation comes back. If they hold too long, the economy stalls. And Jerome Powell has 6 weeks left in his job. The man who spent years calling Bitcoin a speculative asset is almost gone. And meanwhile, this should be a bigger story than it is. Bitcoin ETFs are now being used as collateral for Wall Street equity trades. The SEC approved cross-margining between crypto ETFs and traditional equity positions. Wall Street built a door into Bitcoin to get out of dollar risk. And now they've decided to use that same door as a floor to trade against. Think about it. $95 billion in Bitcoin ETFs. That's the institutional floor right now. It doesn't evaporate because of news cycle. It's collateral. And you want to know what's happening to retail while the institutions are building their position? Extreme fear. According to these pixels on your screen, retail is scared. Institutions are accumulating. The gap between people who understand what's happening and the people who are still staring at the 30-day chart is wider than it's been in a long time. This is the macro environment Bitcoin was designed for. A frozen central bank, a depreciating reserve currency under geopolitical pressure, a financial product that $95 billion of institutional capital has already decided is worth owning. Do you think that's an accident? Or you think maybe those 14 banks writing 1,598 reports about broken plumbing know something the Fear and Greed Index doesn't know? Also, the Treasury Secretary of the United States said something this week that I don't think most people fully absorbed. Scott Bessent, the Treasury Secretary, the hottest Bitcoin influencer right now, who's not a Bitcoin influencer, just said, quote, "I think that it's impossible to proceed without Bitcoin market structure. We have to get it across the finish line. Impossible to proceed without Bitcoin market structure. Of course it's impossible to proceed. The Strait of Hormuz is still closed for the dollar. That's why my gas prices are so high this week." That's not a commitment to hedge fund crypto portfolios. That's the Treasury Secretary of the United States saying Bitcoin legislation isn't optional. It's preconditional. You don't move forward in this financial environment without a clear legal framework for Bitcoin. And you don't move forward your oil tanker without some fresh yuan, son. Bitcoin went from magic internet money to Treasury priority inside one administration. That's good, right? And within 48 hours, the president's son said this: "I've got more conviction in cryptocurrency right now than ever before. Volatility is our friend."
In fact, I've got more conviction on cryptocurrency right now than ever before.
Okay. Cryptocurrency, sure. But then he went further.
The premise of this is the whole system is genius, right? You're using massive compute power to otherwise kind of protect a financial system of an asset that's beyond scarce, that everybody wants, that's global and solves all the problems that I mentioned before. Again, you want to buy something, you could send me $1 million worth of Bitcoin right now. It could hit my wallet in 3 seconds and you practically pay zero fees. Like, tell me that every financial institution in the world isn't pissed off about that.
Oh yeah.
They want to extract the fees. They want as many middlemen as humanly possible because that's what keeps their 70-story buildings lit and alive and their CEOs making hundreds of millions of dollars a year. You're pretty much bypassing all of them. And I think it's a great thing. In terms of, kind of financial democracy, I think that's a really, really good thing for humanity.
Do I need to remind you that that's the president's son on camera explaining why banks hate Bitcoin? You could send $1 million, 3 seconds, zero fees, and every bank in the world, well, I can imagine they're furious about it. That's not a value proposition as much as it is a confession from inside the White House. The banks are pissed off because it works, and it works without them. And it's not just the US, there's also Taiwan. A sitting legislator is publicly pushing the government to establish a strategic Bitcoin reserve. The Taiwanese government already has 210 Bitcoin in custody, and the central bank is officially studying the mechanics of sovereign adoption. If you're a central bank, just print the damn money and buy as much of this stuff as you possibly can. I mean, who's going to be first to figure that one out? Come on. This is the sovereign adoption wave that we've all been discussing. El Salvador started it. The US is now on record. Taiwan is studying it, and that's how the sequence of events occurs. But really, we all know Bitcoin's adoption is a bottom-up movement, not a top-down. So it's no surprise that central banks aren't just going full tilt. And here's the timeline that should bother the skeptics. Bitcoin launched in January 2009. That's 17 years of network effects. 17 years of blocks mined, nodes running, developers building, companies forming. Bitcoin is older than the iPad. I did not know that. Older than Instagram, older than most of what people are interacting with online every single day. And here's Druckenmiller saying it wasn't needed. In a year 17 of a network that has never gone down, never been successfully attacked, and never stopped producing blocks, not once. The obituary writers, they've been wrong every single time, and they have 17 years of chances to be right. But here's what they missed. If the past few minutes have you thinking seriously about self-custody, about actually holding your own Bitcoin without relying on an exchange or an institution that could break down or disappear tomorrow, the Bitcoin way makes that transition simple and safe. They onboard people into Bitcoin self-custody one-on-one, step-by-step, so you're not figuring it out all alone. And if you go to thebitcoinway.com/beyondbitcoin, you can book a free 30-minute consultation with one of their team members. Link in the description below. That's thebitcoinway.com/beyondbitcoin for a free 30-minute consultation. It's free. That's it. Moving on. On Saturday morning, Michael Saylor posted on X, "Stretch the orange dots." What the hell does that mean? For context, Saylor tracks every strategy Bitcoin purchase on a chart. Each purchase is an orange dot. The bigger the purchase, the bigger the dot. And recently, he posted a very large orange dot. What followed estimates as high as 25 to 30,000 Bitcoin, up to $2 billion worth of Bitcoin this week alone of a purchase. That would bring Saylor's total Bitcoin holdings to above 760,000 Bitcoin. Jeez! Now this is week 13. 13 consecutive weeks without missing a single purchase. Not one. The "they'll stop eventually" crowd might be looking at their shoes right now and wondering how they're going to leave the room. What Saylor is doing isn't just buying Bitcoin. It's proving out the corporate sovereign accumulation thesis. The idea that a company can build a balance sheet around an appreciating asset and issue financial instruments around it. That flywheel, every dot is a data point that the model works with. And he's not alone anymore. Adam Back's company, BSTR, just announced they're about to purchase up to $1.5 billion in Bitcoin. 21,000 Bitcoin. The corporate accumulation wave is no longer just strategy, it's category. I like the joke there. Strategy, category. Bears will be bearish until they have no choice but to be bullish. And bulls will be bullish until they have no choice but to sell their chairs. Last week, something that only happens once happened. Block 939,999 mined by Foundry USA, the block that pushed total circulating Bitcoin supply past 20 million coins. 20 million Bitcoin out there, out of the 21 million total that will ever exist. 95.2% of all Bitcoin that will ever be mined is now already mined. There's only 1 million left. Those 1 million coins will take approximately 114 years to mine. And when you factor in lost coins, wallets nobody can access, early miners who had no idea what they had, the effective circulating supply is probably somewhere between 16 and 18 million, maybe even less. 1% of the total supply remains mineable before the next 100 years are up and the door is closing. Here's the part I want you to actually hear. Druckenmiller said Bitcoin wasn't needed this week. The same week, Iran stopped taking dollars at the world's most important oil corridor. The same week, 14 banks said the financial plumbing is breaking in 1,598 reports. The same week, the Treasury Secretary said you cannot move forward without Bitcoin market structure. The same week, Bitcoin outperformed gold during a live geopolitical conflict. And the same week, we crossed 20 million coins mined. Wasn't needed. The petrodollar system that was supposed to be the permanent foundation of global trade just sharded. The Fed chair is walking out the door. Wall Street is using Bitcoin as collateral. The president's son is explaining Bitcoin settlement speed on camera. Taiwan is studying a sovereign reserve, and there are 1 million Bitcoin left to mine over the next century. The scarcity argument is no longer theoretical. It is written into the math of every block from here on forward. The system that was supposed to protect your wealth is breaking down on every front simultaneously. The dollar lost its grip at Hormuz. The Fed is paralyzed. The institutions are building their Bitcoin positions while retail panics. And the administration has gone on record saying Bitcoin is kind of the answer. The people who are actually running these systems are doing everything they can to accumulate more. So for God's sakes, study some Bitcoin. So before I sign off, I want to talk about ClubOrange, which is formerly known as the Orange Pill app. It's the premier app for Bitcoiners to connect, argue with each other, or just have normal discussions. I've connected with a lot of you on there already. I even connect with, what's his name? HODLing Tees. HODLing Tees sent me this awesome hat. Thank you, HODLing Tees, for this awesome hat. Anyway, ClubOrange, that's where we connected. If you want to find me there, I'm at Oshins, OSHINS. I read all my DMs and I answer accordingly. So we'll see you there, cluborange.org. Here's what I keep coming back to this week. Druckenmiller, he's not stupid. He's a little Druckenmiller, but he's not stupid. He's one of the sharpest macro minds in his generation. He managed money for decades at the highest levels. And he looked at the same week that I'm looking at, the same war, the same yuan demand, and the same Treasury Secretary quote, and said, Bitcoin wasn't needed. That's not ignorance. That's a map that doesn't match the territory anymore. The map he learned, the one where the dollar sits at the center of everything, well, that doesn't have a route for what's happening right now. It's closed off, and it requires yuan to get through. Bitcoin doesn't ask for permission to be relevant. It doesn't need Stanley Druckenmiller to believe in it. It's just there, producing blocks every 10 minutes. Whether or not the Strait of Hormuz is open or not, whether or not the Fed chair shows up or not, whether or not the Treasury Secretary votes yes or not. 20 million coins mined, 114 years of supply left. The irreversibility is the point. That's not a bug. That's the feature that makes everything else work. Thank you so much for watching this video. If you like what you see and you want to see more, make sure you hit that like button below, or you can subscribe to the Simply Bitcoin channel for more content like this. We're coming out with it every single day of the week. You can leave us a comment. Don't forget to hit that notification bell. Anyway, I'm Oceans. This is Beyond Bitcoin. If you want to reach out to me directly, I'm at RunDanceBitcoin on X. Until next time.